many great Canadian dividend stocks have finally seen some great growth in their valuation over the last couple of weeks. This event was mainly driven by the fact that the Bank of Canada has started to slowly start to cut down the interest rate. And so today we'll be taking a look at 3 of these great Canadian dividend stocks that are currently trading at some great levels and that are offering a lot of great passive income from their dividends. So without further ado, let's take a look at my pick number 1. First up is the company Enbridge with the ticker ENB. With a gigantic dividend that exceeds 7%, this energy company that is one of the largest of its kind in the entire world could be a great option for you to have on your watch list. Indeed, when we take a look at their more recent earnings report, we can notice that they've been performing quite well by being able to increase the total revenue of every single one of their operation fields. We can see that Enbridge total adjusted EBITDA has been increasing by over 11% year over year. And so these great results have helped them to increase their distributable cash flow that helped them to pay their dividends by over 9% year over year. And so for everyone that would be worried that Enbridge might not be able to continue to pay such great dividends to their shareholders every single quarter, well, we can see that with a track record of increasing their dividend for the last 29 years, add with the fact that they aim to keep a DCF payout ratio of between 65 to 70%, this helped them to continue to pay a great sustainable dividends to their shareholders. One of the main reasons why Enbridge is continuously able to grow their total revenue and their total distributable cash flow over the years is the fact that they keep making new acquisitions every single year. At the end of the last year, for example, they have acquired 3 natural gas utilities from Dominion Energy, which has helped them to become the largest natural gas utility in all of North America. But their business model is not only depending on oil and gas utility and transportation, but also on great renewable energy sources, with their objective that has already been fulfilled to reduce their gas emission by 35% before 2035. Enbridge keep investing a big portion of their capex into great renewable energy projects, for example, great offshore wind projects that are currently underway in France. When you combine these factors with a super cheap price to earnings ratio and some great price prediction from the analysts, Enbridge is definitely a company to keep on your watch list for the rest of 2024. Now, second on my list is a company that I haven't talked a lot about in my previous videos, but it is the company Dollarama with the ticker DOL. Canada's leading dollar store chain that is selling a bunch of different stuff for a few dollars has experienced significant gains in its valuation since the beginning of the year, where we can notice that its valuation is currently up close to 40% year to date. This upward momentum has been created by many different factors such as great financial results, strategic growth initiatives, and favorable market conditions. While everything costs more and more, one of the only things that keeps staying at pretty much the same price is Dollarama stuff, with over 1,000 stores that are located all across the country, but most importantly in Ontario and in Quebec. This company has been able to generate over $4 billion of revenue in 2023. Add to this, in their more recent earnings report, we've seen that they've been able to increase their store sales by about 9% year over year, and we've also seen their net earnings explode by over 20% during the same period. This growth has also been reflected in the number of stores that keeps growing quarter after quarter, and that has now reached over 1,569 stores across the country. This impressive expansion of Dollarama over the last couple of decades has been fueled by higher transaction volumes and an uptick in average transaction size. And so while many people might be worrying that this trend will start to fade at a certain point, well, it isn't what the company is forecasting. Indeed, Dollarama's strategic initiatives have played an important role in their capital appreciation over the last couple of years, and it is expected to continue on the same trend for the future. One of the most ambitious objectives of Dollarama is the fact that the company aims to have over 2,000 stores open by 2031 in Canada, and so by offering a broad range of high quality and low price merchandise. This has resonated well with cost-conscious consumers, especially in an inflationary environment. And so even if they have a super low dividend yield at the moment of less than 1%, with some great dividend growth track record over the past 14 years, combined with a super low dividend payout ratio of less than 10% at the moment, it is fair to say that this company will continue to increase their dividends over the next couple of years. At the same time, with some earnings growth that are predicted for the next 5 years to be about 15% per year of growth, it is showing that this company is not only a great option for investors looking for a great dividend growth company, but also a one that has a lot of potential capital appreciation for the future. Finally, for the third and last pick on my list, I've came back with one of my favorite Canadian banks, and I've picked the Toronto Dominion Bank with the ticker TD. After facing a lot of turmoil over the last couple of months and years, this member of the big 5 Canadian banks could become a great option where it has restarted to grow some interesting value over the last couple of weeks. In fact, this bank that is currently worth over $100 billion has been facing a lot of problems lately, notably because of some potential money laundering allegations. Indeed, we've assisted to a certain decrease of the valuation of TD following a Wall Street Journal talking about some potential laundry illegal money from Chinese drug traffickers and Mexican cartels. And so this turn of event could cause TD to pay up to $2 billion of fine for all of these potential allegations. Nevertheless, with all the cash that TD currently sits on and with the prestige that it has been able to achieve over the past couple of decades, it won't be an event that will drown the company towards a potential bankruptcy. In fact, TD is still one of the main and most important actors in the financial sector in Canada, and it is still able to grow because we can see that year over year in their more recent earnings report, we've seen that their revenue have been able to grow by about 11%. However, in a high interest rate environment, it also makes that their provision for credit losses have also jumped year over year, since many people might face difficulties to pay back their mortgage and their different loans of the bank. Add to this, they are also facing higher expenses, notably due to higher employee costs as well as unexpected expenses from the AML investigations for the money laundering case. In any ways, while this company is currently in a bad momentum, it could represent a great opportunity for the investors to buy a 13 price to earnings ratio company that is currently trading at discount. Add to this, TD is also paying an excellent dividend of over 5% paid on a quarterly basis, with a great sustainable dividend payout ratio of only 65% at the moment. So there you have it. Those are 3 of the best Canadian dividend stocks in my personal opinion that you should keep on your watch list for the rest of 2024. With the recent news of the interest rate cut by the BOC, this represents some excellent news for these type of companies that usually have a little bit more debt because they want to be able to pay the dividends to their different shareholders. But on your side, if you're looking for another way for you to invest in the stock market without having to pick one by one the different companies that you want in your portfolio, well, you can check out the video that's going to be right over here, and I will see you soon. Peace.